Happy New Year, everybody. Welcome back. Can you believe that it is 2025 already? Time flies faster than a house that is underpriced in a hot market. My name is Alice Prince, and I am a broker with Royal LePage Signature, helping home sellers and buyers in York Region, Durham Region, and Toronto. Now, in today's video, we're going to dive into how York Region performed throughout the year and compare it to 2023, plus also go over what happened in December and what it means for you if you're looking to buy or sell this year. So let's just jump right into the numbers. Now, starting off with just looking at what happened in the month of December, 665 homes sold in the month of December, and only 772 new listings hit the market in that entire month in York Region. Active listings, which is all that's available for sale in the market and rollover from months prior, was also down from 4,023 to 2,686. Something that is not mentioned and often missed, and I think very important to know, is that 763 of those listings that were on the market were actually terminated. So it's likely that those sellers were on the market for maybe a little bit longer than expected. They took their homes off the market in hopes to retry in the spring, given obviously the seasonality of the market. So when comparing it to November, it makes sense that these numbers are down, seeing as it was the holidays. And realistically speaking, with the way that the holidays fell this year, it seems like we really only had 2 weeks where people were kind of just focused on real estate. Now, home values in New York Region have been pretty flat over the last 3 years. In December of 2022, home prices were just sitting at $1.267 million. In 2023, they rose slightly to 1.281 million, and in December of 2024, home values in New York Region had a monthly average of 1.268 million, which is down slightly from the previous month. So this indicates that the market has found its footing while we navigate the interest rate environment that we have been in, and it shows resiliency of our marketplace. But if you really want to be keen and understand the market, knowing the next two stats up I'm going to mention are paramount to getting a gauge of where the market is at. Firstly, it is sales to new listing ratios, and secondly, it is months of inventory, which I spoke on my channel before, but just to refresh your memory, these are two important stats to look at when you are considering how the market is behaving in terms of the dynamic between buyers and sellers. They are essentially two different ways of understanding the same housing market, but together they give us a full picture into what is actually going on. So sales to new listing ratio tells us how many homes are being sold compared to how many new homes are being put up for sale in that given month. And so it shows us how much demand there is right now. So when we take the sales and divide it by the new listings, we get 83%. So that would essentially translate to, out of every 10 homes that hit the market in December, 8 of them sold. Secondly, there is months of inventory, which tells us how long it would take for all the homes that are currently for sale, not just the ones that came on the market in the last 30 days, to then be sold. So it's kind of like asking, how long would it take before all the shelves were empty? And we get this number by taking the sales and dividing it by the active listings. So if you do that and that number equals to 3 or less, then we're considered to be in a seller's market. And this is where we typically see prices rise. If that number is between 4 to 6, we are considered to be in a balanced market where prices typically remain flat and trade sideways. And if that number was 6 and above, then we are in a buyer's. Typically around balanced market territory numbers, but at this time of year, keep in mind that numbers can be skewed with the low volume, and we often see sale to new listing ratios spike up as not a lot of people list their homes for sale during the month of December, and inventory starts to get absorbed much more quickly. Being said, when we do experience the balanced market is where we see prices start to trade sideways, as I mentioned, instead of increasing and decreasing, which further proves my point as to why the market has stabilized in terms of prices of the last 2 years. One thing to note here is that the Toronto Real Estate Board has started to track days on market in two ways. So there's listing days on market and there's property days on market. Before, it just used to be days on market. The reason being is that it gives a better picture into actually how long homes are taking to sell, because sometimes prices have changed on homes, and when they do, the entire listing usually gets taken down, then re-uploaded with a new price, putting those days on market at 0, but it doesn't give you the whole picture of how long that home actually took to sell. So listing days on market right now is 37, but property days on market, where it shows the entire property, is at 58. This tells me that sellers are changing their pricing strategy around the 3-week mark, and homes are actually sitting on the market for longer, which is something to keep in mind if you are considering to be a seller and that you need to sell your home in the winter months. There is still a fair mix of pricing strategies I see being used, with 27.1% of the homes being sold above list price, 2.3% being sold at list price, and 70% being sold below list price. So just a little bit of a cautious word to the wise as a buyer when you're looking at prices. They may not be exactly what the seller is looking for, but that is a total case by case scenario. This is definitely more common to see in the sub-$1 million price point in this current market. Now in 2024, we saw buyers steadily re-enter the market starting around February and March, with activity really peaking in April. After that, things slowed down from about May through the summer months, as it typically does, before gradually picking back up again in September, October, and November, which are historically strong months for real estate. December, as usual, was an outlier with only about 2 active weeks before the holidays took over. New listings actually followed a similar pattern. Sellers were most active from February through late spring, bringing many homes to the market during this time. Summer arrived, you can see that the number of new listings dropped off, only to rise again in the fall months of September through November. However, as the holidays approached, listings declined once more, following the natural seasonal ebb and flow that we've come to expect in the market. Now, although we saw an increase in activity, it didn't necessarily translate into higher prices last year. If you recall, in June of 2023, interest rates were raised by 100 basis points, which was a bold move by the Bank of Canada to address our economic challenges. So these changes take time, obviously, to ripple through the real estate market. And in 2024, it really reflected the aftermath of that decision. Now, while rates began to decline in June and July 2024, an entire year later, and have continued to drop throughout the year, home prices since October, prices have remained relatively flat, signaling a period of stability in the market. What will be interesting in the coming months is to see how it's going to play out in York Region, specifically because the average price of a home in York Region has been higher than a million for quite some time, with the new mortgage rules allowing buyers to put down less than 20% on homes priced up to 1.5 million. We could see increased buyer demand, especially for those larger homes. But I'm curious to hear, what do you guys think? Will these changes make a huge impact? Let me know in the comments below. For sellers, the spring market is just around the corner. Now, historically, inventory does build in February and peaks later in the season. Now, listing earlier does mean less competition, giving you a better chance to attract that serious A-plus buyer. Start preparing your home now, because thoughtful staging, professional marketing can make all the difference, including thoughtful repairs. Buyers, this is a perfect time to get pre-approved and to start getting your ducks in a row, to really start exploring. Lower competition during the winter months could help you secure a better deal before the spring frenzy begins. York Region continues to be a resilient market full of opportunities for both buyers and sellers, and whether you're planning a move this year or just keeping an eye on the market, having a clear strategy is key. If you have any questions or would like to discuss your real estate goals, book a call with me using the Calendly link below. I'm here to help you navigate the market without feeling like you're solving a Rubik's Cube. Thanks for tuning in. Don't forget to like and subscribe and leave a comment. Ciao for now, and we'll catch you on the next one.